the wayside and didn't have those, at least for now, lasting impacts that we see, the market just continued to rip. So where we are currently, well, we've had a couple really good years in the stock market. We've now possibly just entered into a bit of a consolidation phase. We'll see how long this lasts, but a lot of people think that this has to make a move one way or the other. And I've talked actually about this with Chris Pulver, who's up next on the show. The indices for a long time have been very trendy, Ivan, like very, very trendy. They're typically trending up or they're trending down. Very rarely do indices enter into, in recent years at least, long sustained periods of sideways action. In fact, one of the most recent, like really good examples of a range bound index world was this period right here back in 2014 through 2016. You really just had not a whole lot of movement in either direction, but it can happen. So you can see indices kind of just go sideways and trade nowhere for months and years, even on end. But we don't even think of that as a possibility anymore because indices have been so trendy. So I don't know. Maybe we're going to see a consolidation year for the first time in a while. Hard to say.
Can I have one last word? Not the last
yes,
word.
You can have one word. What's the one word?
I want to short Microsoft today.
Microsoft?
Yeah, because my time still says 16:06. Like I am 13 minutes late, or it's stuck for 30 minutes.
That's a very interesting reason. I have those kinds of thoughts too. Like some company like makes a mistake or something, I'm like, I'm going to short them just because of that.
But this bar, this what do you call it, Windows bar thing hasn't been working the whole day. So I've been restarting and whatever. But yeah. So I don't know. Is anyone's Microsoft working today? Because the same thing happened yesterday on another laptop. So that's not my recommendation, but that's gonna be my vendetta for today.
Well, there you go, everybody. Short Microsoft on the basis of your Windows bar not working properly, and have a great day. Just kidding. No financial advice here. We're just sharing our opinions and thoughts on the market as always. Ivan, thank you for joining me for this segment. I want to just make sure everybody who enjoyed that commentary from Ivan, go subscribe to his YouTube channel. It's Ivan FX on YouTube. You can find him there. The link is in the chat right now. Search him up, follow him, subscribe to him. You can also find his coaching services within our Discord server. If you're interested in doing one-on-one coaching, that's something that he offers. Send him a DM, ask him about it. And Ivan, thank you very much for coming on.
Thank you very much for having me.
All right. And up next, guys, we got Chris Pulver taking over the show to talk more markets. Now, I just want to preface, if you're somebody who is interested in a little bit of everything, this might be the show for you. Chris Pulver quite literally trades the most markets I've ever seen somebody trade. He trades more than I do, and I trade a little bit of everything. Chris Pulver trades options. He trades Forex. He trades futures. He trades a little bit of everything. In fact, you'll see a little bit of a preview in this upcoming clip to kick off his show. So stay tuned. Thank you guys for tuning into my part. I'm going to throw the show over to Chris Pulver just after this.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Let me just double check everything. Yep. So we are sitting with a gap higher, despite some tariff talks. Steel stocks pretty volatile this morning, but the markets are up. We have an interesting mix of news this week, starting with Powell and a 2-day testimony. So today's pretty light news-wise. Tuesday, 10 a.m., you have Powell testifying on monetary policy with the Senate Banking Committee in D.C. That's a 2-day, so Tuesday at 10 a.m., Wednesday at 10 a.m. Then you sprinkle in Wednesday with our big inflation readings. Now, I do want to look at a couple of prints. So 2.9 is a previous CPI. Is that right? Yep. So we went from 2.4 to 2.6 to 2.7 to 2.9. They're forecasting basically a same print here. Previous 2.9 forecasted for 2.9. Does it print 2.9? I would say the market probably has an adverse reaction if it is 3% or greater. But if the market comes in and these economists have been perfectly forecasting like right as forecast, right as expected. So if it's 2.9, that's probably fine. If it's 2.8 or less, I'm sure the market gets a little excited about that. We are within about a whisker of these all-time highs. This is the previous all-time high the S&P has hit, and we're just staying right there. I'm not saying that we have to make this big surge to the upside, but the last time we saw the market get excited about a CPI print, it was right here. This is when the market jumped on CPI, and that momentum carried us all the way up into the DeepSeek surprise. Then the market fought all the way back until we had the tariff surprise. Then the market fought all the way back until we had a tariff surprise. So a lot of volatility back and forth. But this week, do we have something like this that is going to be a gap higher and a push into all-time highs, or is it going to be a gap lower and all of a sudden we're in the same situation where the market's not at all-time highs? I think a lot of the positivity flowing in the markets right now, I mean, look, I'm not going to crap on the AI and this look, AI is growing. I had some interesting screenshots on the podcast this weekend. Let me just walk through some of those. So what else do we have here? We've got some examples of the crypto alt market that is dropping. Corporate profits continue to run while wages are stagnant, and the labor market remains pretty tight. We saw that with non-farm, like we're still printing positive job numbers. The unemployment percentage itself is decreasing. Quits are going down, which means people are just hanging on to their jobs, not quitting jobs, not transferring jobs. So right now, so far for the earnings reports we've seen in these last couple of weeks when earnings season has been picking up, we have a huge increase in S&P 500 companies mentioning the word or the phrase AI. So just that's the new story. If you're not saying AI, you're falling behind. If you're not actually doing something with AI, you're probably falling behind. So this became, it wasn't, what was it, 2-3 years ago? Everything was about blockchain. If you're mentioning blockchain, you're making money. If it had to be something on forward guidance, just leave inflation out of your transcripts. Anyway, and AI is going to be something that's probably going to move faster than what we would expect. So anyway, just thought it was interesting. Like AI is not going anywhere, but it is a big question mark on how profitable it is. And what we're dealing with front and center is, historically speaking, when the U.S. has been at a 23, 24 price to sales, price to earnings, like high valuations in the U.S. market, it usually underperforms. So, I mean, we've got a couple things that show history's on our side. Last year was a 20+% year performance. Usually that's followed by positive momentum. 2 years in a row, 20+% positive momentum. So we could still have positive drift. I think the big benefit that a lot of people aren't paying attention to would be China. Okay. I think that the whole optics of like, we are going to be in a trade war, all these trade wars. I mean, look, it's a tool. We don't know how bad it's going to be. Tariffs, as far as like having an overall like stranglehold on the economy, it's never really been the case. But nevertheless, I mean, China's up 15%. Now that is the low for the year. So we had our dips as well, but I mean, you compare the difference between SPY, which had a dip here. This would have been January as well. So the SPY has made a nice little run of about 6%, currently sitting around 5%. So U.S. stocks, let's just use the S&P as a benchmark here. From the low to current price, we're sitting up around 5%. Okay. China, from the same low to the same price, you can see it's much better. So China's up 15.27%. Now, this doesn't mean it's like, oh my gosh, China's the best place to invest. It's just follow through, right? I mean, technically we had that big surge in September, and then the market spent all this time just doing nothing but pulling back and giving back a lot of that September hype. But we have some positive flows. We have some animal spirits. There has been, an entire country that's been underperforming. So would you rather buy, an index at, let's say, a multiple of 23 or a multiple of 12? And so I think like the value play, it's like China is a lot more valuable, whether you trust it or not, like it or not. I still like some of the exposure. So, I mean, we've had a pretty good gap up on Alibaba. It's up to 109. So my positions there doing pretty solid, which I'm happy with. We started a dollar cost average into that. So Alibaba is currently up around 6 grand. Baidu is up. Actually, Baidu is down, but I'm looking for covers at like the 100 to 105. JD, I could look at a roll again. I've been bouncing that around the last couple of weeks of whether or not I want to roll. Got 1,500 shares of JD. Do I want to roll it right into earnings? I don't know. Probably not. I could get it called away for $39, and I've lowered the cost basis down to like 35 and change. I could do one quick roll on this, and I'd have to go out through the week of earnings. But if the price is going really, really well, I mean, if it's like outside the expected move, then it might be in my best interest to roll it by another week or so, even if I keep the same strike price. But if I can get like an extra 50 cents, I mean, it's $250 per account, so it wouldn't hurt. But anyway, Nvidia is also making a nice comeback too. So we're at 134. We've got a gap fill between this 140 to 142 area. I mean, this is part of the reason I want to time Nvidia right here. Speaking of, I think I have an iron condor that's got to be close to profit. Let me check on this Nvidia. I know I have a ratio spread here. That's a ratio spread that's now up. Okay. I should have an iron condor on Nvidia with highs at the 160 something. Where the heck did it go? Hang on, let me find this in my tracker. Okay, so I'm just going to try to find it here. $160 by $165 call spread, $115 by $110 put spread, collected $1.36. Okay, let me find that trade. So Nvidia. Here we go. All right, so here's my 160 by 65. I'll use this little yellow dot account. So 60 by 65 right there, and then a 10 by 15. 10 by 15 there. Close. I think I'm going to take the profit on that. So this initially was traded in for $1.36. It's showing less than $1 right now. Price is 13 delta, and I mean, that's freaking perfect. I couldn't ask for a better center price. I'm going to take the profit on this one right now. So $1 debit to take profit on this. All right. So let me close these trades up really quickly. Nvidia. There's my 165, 160, 110, 115. This goes out a couple more weeks, but it's perfectly centered. And right now, profit is showing, I have minus 78, 99, 105. Yep, about $40 per contract. Okay, so I'm going to take this for hopefully $1. Got filled for $1. Okay, I'm closing this trade down. All right, let me take a moment to close these out. So the 110, the 160 by 165, 115 by 110. Close this out for $1. Filled at $1. Yippee skippy. Cool. 110, 115. Fill me at $1. $1. There we go. That's fine. Okay, I'm just going to get these ready to go. That one's okay. This one's okay. This one is okay. This one should have the iron condor. There's my 110, 15, 60, 65. Close out for $1. Come on, man. Mid price is 99 cents. You freaking filled it a bucko one. All right, good. Looks good there. Looks good there. Looks good there. Okay, good. So that trade is closed. Just going to add that to my tracker. So closing for $1 debit. Cool. Take profit. And then I have some ratio spreads. I have some bull call spreads. I have some naked puts that I sold or cash secured puts that I'm willing to own the shares. So I'm looking to just generate income on NVIDIA. I do have some trades where I own it around 130. I own the shares at 130. The collar is a 135 by, I think it was a 115 or 120. And if I get the stock called away, it's still fine by me. Let me see where my break even is. So right now I own the shares around 127.95. 127.95. So 127.95. If I get it called away at 135, makes 705 per share. But this iron condor is pretty perfect where there's my low, there's my high. We're right back into the center. My deltas are pretty much perfect at 13 right now. And I'm just going to take the profit. So rather than holding on and hoping that for the next, couple of weeks, this trade is still going to stay centered. I mean, if NVIDIA starts to go more bullish and fill the gap, it's going to end up getting closer to my call side. So now that I'm perfectly centered, I'm just going to take the profit. Okay, so that trade's good. That is closed. So let's put that in the old Pulver alerts. I'll find that in here in the Discord channel. Good. Got the debit spread. There's my iron. So that trade is posted on the 15th of January. So I'm going to reply to that one and get that updated in the Pulver alert section. So that will be a reply. Trade management update. So it's a 160 by 165 and the 115 by 110. We are now perfectly centered again. And enough time has passed for a nice profit. Closing for $1 debit. So it's 38 cents profit per contract. Beautiful. Okay, that was pretty easy. Let's do a little top down here. Currency strength news this week. 2-day testimony from Powell, as well as CPI, PPI Wednesday, Thursday. Last week, a lot of chop on Friday to wrap up the week. Big sell-off on Friday as well. More tariff talk. Gapped lower. Futures spent the entire night fighting back. This is what the futures market looked like overnight. So sell-off on Friday, gap lower, and then fought back immediately. Steel stocks started to see a 25% tariff. The first thing I checked was two steel stocks I've traded over the years, CLF and X. So this is Cleveland Cliffs, which I do have some shares of Cleveland Cliffs. and I'm kind of willing to buy more in the single digits. I just don't know if we're going to get there. I'll keep an eye on this one. And then United States Steel, which continues to go back and forth with Nippon, whether or not we're going to, allow a merger or allow a buyout. And apparently that keeps getting struck down. So overall, this stock is still kind of range bound. So the last time we had a crazy big run on steel would have been 07, 08. That would have been like your big value play. I know there's talks of this same type of thing here. It's like this is just a big accumulation, and we start. If we start to break higher, then sure we can end up making new highs. I don't know if that's going to be the case though. I mean, this is what I'd be hoping for. We have resistance, we have support. I'd love to see this price either come back in the midpoint or come all the way back down into very attractive support levels, and look for some good upside targets. A break above the highs, I mean, we have to acknowledge it. If the break above the highs is legit, then this support breaks, and you can measure that move from low to high and measure your breakout. So if we go above, let's say 46, I mean, I could get a breakout towards like the 80s. $80 to $90 seems fair. It's crazy how this ran from digits to 100 to almost $200, and then it crashed all the way back down to like less than 20. So clearly it's volatile, but something to watch for the value play this year. All right, we've got 0.66% in the S&P. Equal weight is underperforming right now. Nasdaq up 1.3, equal weight up 0.8. Dow fractions 0.2. Russell struggling, but Russell growth killing it today, 1.26. So US is green. China's looking pretty good. VIX 1 day is down a ton, down 43% on the VIX 1 day, down 3.4 on the 30-day. No real volatility events for me to say I want to jump in and buy anything on SVXY. It would have to be, I don't know. I'm just going to wait. I mean, we did poke all-time highs, but SVXY is still nowhere near it. This is mostly an instrument that I play during VIX events. Dollar index still quite indecisive. So we had that big reaction where the gap was up on the dollar. Dollar got a little bit softer. I am curious if this high holds and we have like another kind of high, low, call this a little bit of a kind of a fake out trade or just a noise. I mean, it was hard, like Friday to Sunday, that big gap in the market, that's hard to trade. But if this is lightly consolidating and then the market breaks to go lower, dollar weakness would be good for the stock market. I believe gold hit all-time highs again today. I think we'll double check that here. Oil still hanging out with kind of some range trading. I've got an iron condor on oil as well, around $72. Natural gas hanging in there. Still want to see if we get up to fresh highs. Gold, good Lord, man. Gold is on the freaking move. Another all-time high today on gold. Silver, underperforming. Let me take a look at the difference between the two. Okay, so gold versus silver. Gold's performing well. Silver's hanging in there. I'd like to see silver obviously take another march higher. Gold is still doing its thing. I'm still enjoying the shares long on GLD, but I haven't added much to it. So I'm just kind of patiently waiting to see if I like anything there. Otherwise, does this gold versus silver, do start to see something where you can time this, where they can both perform well, but does silver start to outperform? Or I guess if gold continues to do well, does gold actually break higher? Maybe gold is the like best flow right now for safe haven. Gold is outperforming the S&P 500. Gold, I think right now is outperforming Bitcoin year to date. So all your gold bulls out there are probably loving this year and saying, they feel like they've been proven right for the first time in years as they've been watching Bitcoin outperform. Speaking of Bitcoin, we're at 97K. This doesn't really change any opinion. USO, if I'm trading an ETF on oil, probably USO. Resistance, support on Bitcoin. I think this is another accumulation phase. So if we're looking for levels to buy, low 90s, pretty good spots to buy. Breakouts would probably have to come with the bull market. I think that's the only hesitation that Bitcoin has right now is we just had over the last probably 2 to 4 weeks, we've had a pretty nasty correction / crash in altcoins. Ethereum took a huge nosedive over the last couple weekends. Bitcoin has been pretty resilient, which I think is commendable. But without the S&P and the Qs making all-time highs, I think Bitcoin is still just sideways. And maybe a nice accumulation zone, but a more pronounced bull run in U.S. equities probably leads to some more risk appetite in Bitcoin. Otherwise, watch your levels and be prepared for that typical volatility that we can see. But I think the 90K, like the 90K to 105, 90K to 105 could range bound for a while. I mean, 3,000 on gold, it's right there, right? I mean, we're sitting at 2908. 3,000 seems, all but a guarantee, and we'll keep a close eye on it. But I'm long. I'm just considering is it a spot that I should be looking to take some profit on my gold positions? I mean, it's up. It's a 12.64 extended move from the 200 moving average. All of my technical indicators from momentum to overbought, oversold conditions, it's overbought with divergence, and that's on multiple time frames on the higher time frames. So yes, we can run, we could capitulate, we could have this blow off type top, and it just keeps stretching through 3,000 plus. But I'm probably going to be happier taking and booking some profit to be on the safe side for the shares that I do own, because I'm pretty sure I bought some shares. GLD. I mean, I've got 11 grand in profit. I bought GLD around 218. So GLD at 218, it's up 268. I'm up $50 a share. It's pretty good. I mean, you'd think I'd be trading like SMCI or Palantir to be up $50 a share, but no, I'm trading gold, and it's a gold ETF, and I'm up $50 a share. So not bad. Anyway, but if we run up to that 3,000 handle, I think it would probably be wise to protect some of that profit. The nice thing is it's running uncovered, and the rest is all just credit spreads. So probably just putting in some trailing stop losses, or putting in some lows that I can adjust. So if we go higher, put a stop loss in, goes higher, put a stop loss in. I just do this until I get knocked out. Not a bad approach. All right, Bitcoin, we're good. MicroStrategy. They had earnings, and they missed on top and bottom, but the market is still kind of pricing out MicroStrategy a lot like the resiliency of Bitcoin. So sideways right here, I need it to stay above 310 by March. I've got downside protection if that's the case. I could consider continue to roll. Maybe, I don't know, maybe another week if it's worth it. If I went out to the April expiration, maybe. But I probably don't want to take this trade into anything past July. I'm looking at this year for 2025. I'm looking at this as a really interesting first half of the year and a second half of the year. I think that look, if we're not going higher for the first half of the year, so let's say that we're sideways. Okay, let's say that the year is sideways. So from January to, let's say, like June, okay, we haven't really had any major downside. We haven't really had any major upside. We're just churning, and there's all this uncertainty every single week or every whatever. If there's not really a lot of direction, the second half of the year is going to be something. Most likely something. Obviously, the market goes sideways for the entire year, but that's probably unlikely. So first half of the year, if we're sideways, I would be bracing for a lot more volatility one way or the other. Doesn't really matter what direction. Obviously, it's easier to see the market go higher if the market can kind of get through this waiting period of all this uncertainty and how aggressive like tariffs are potentially going to hurt things or not hurt things. What's the Fed going to do by June with the rate cut? Does the Fed change its stance at all? They're doing some type of pause and restrictive, like kind of hawkish pause right now. So if I can just kind of make an assessment of where the first half of the year is, second half of the year is where I think we get a lot of movement, possibly a lot more surprises. And I don't know if those are going to be positive or negative. Having one cut in the mix is okay. But if the Fed only cuts in June and does not cut for the rest of the year, I don't see the dollar necessarily getting too much weaker. I don't see the yields coming down too much. I think that we would be getting into that like very slow growth environment. And so right now, we have the hype of AI, but if it's hundreds of billions of dollars being spent on AI, but yet we have super high borrowing costs. I mean, if you've got, look, you got companies like Google and Apple and Microsoft and Amazon, and just like companies that are just flush with cash, they can afford to spend hundreds of billions of dollars. Okay. But if you are a company that needs to borrow to spend money in AI and try to grow and try to build out this AI infrastructure, if you're borrowing at much higher rates than you could a couple of years ago, that's a big difference on slowing growth. That's a big reason why this is also pretty staggering. You know, everyone has maybe heard the phrase or the acronym IPO, initial price offering, right? You know that we have like 1 or 2% of like IPOs versus a traditional like 20%. Like the IPO number since, and this is all like messed up during COVID when everything was coming out as a SPAC or a special purpose acquisition. That used to be like the fast track way to get an IPO. All that is like dried up. Like there's like nothing new coming out, and there's very few like big publicly traded companies or IPOs waiting. It is an interesting landscape. So I just think that a lot of good stuff has been priced in. A lot of good stuff is sitting near these all-time highs. At these valuations, the market typically underperforms. It's that simple. If you look out the next 3 to 5 years, it's probably going to be an underperforming. It's going to be an underperforming window for the S&P at these valuations. So we have yet to see a meaningful correction outside of August last year. We had a 4 to 5% correction December during the holidays, but are we going to pull back 10%? Are we going to pull back 10 to 20%? It's very possible. I mean, to get me a little bit more excited about buying a dip, I've got to see a correction probably to that degree. I've got to see like a 10 to 20% correction. Otherwise, I'll play China. I'll stay diversified. I'll play gold and silver. I'll play Bitcoin. Bitcoin is still going to be a lot tied to risk appetite. If we don't see positive flows and optimism, and I mean, I think Bitcoin is a lot of good and a lot of promise and a lot of optimism, but it's going to have to require positive flows across the board. It's not going to survive on its own. Okay. So anyway, just thoughts on this year. I mean, a lot of income trades, and that's what's moving the needle for me. And the exposure I've had on China is looking pretty good. Foreign markets that are non-US, I mean, the DAX sitting here making all-time highs. Here's our rip through where's that bottom in? I mean, this is crazy. I looked at this, the same thing between the US and Europe. The DAX from this December low is just destroying the S&P right now. It is up, I think, close to 20%. Nope, I was looking for November. All right, so this low in December, right before the end of the year, we've got a 12% rip, 11.72, and we're sitting here again near these all-time highs. Here's the FTSE. Bank of England just cut rates. This same thing around that December period, that December low. The FTSE's up almost 10%. So you've got UK doing really well, Germany doing really well, Europe's looking a little bit more attractive. Argentina, that had a crazy big run, is still sideways. I'm still waiting for a dipper pullback. And then China, of course, coming out with that December low right in here. January low also outperforming the US. Brazil looking a little bit better. I have some longs there. My Mag 7 stuff. Where's my Japanese yen? Here's my 6J. Still up some profit. My Japanese future position looking pretty good. Currently up around $2,200, and not really going to close it yet. There's still some time in the trade. I do wonder, like, if I get up into this point. I mean, the numbers are funny, like 0.0067. That's all I need to see price get to. Okay. But Nikkei has really done next to nothing since our big July to August disruption. So this is still a monster disruptive event where the Nikkei is still kind of figuring out, like, what is it going to do? Hopefully the Japanese yen doesn't break the Nikkei back down. Hopefully it's just more of the same. That would be agonizingly frustrating to trade. But at the same time, if we get back to highs, is there momentum to kind of resume something to get out of this? This is like a huge dark cloud / shadow in the Asia markets right now. You know, it was such a disruptive event. I think that the global economy is probably hoping that nothing like that happens in the near term. You know, and we're sitting here wondering, like, what about the Japanese yen? Look, dollar yen's probably a good proxy to watch. My concern on the dollar yen would be that if we break this low, that we are going to be heading lower. right? You take a look at all your other yen crosses. So, I mean, the dollar yen is a good barometer. Look at your other yen pairs. Aussie yen. There's a couple of levels here, right? There's a couple of levels here, but this could also be setting up for a larger break. But do I trust that move? Not at all. I wouldn't be surprised if this puts in some type of low, comes back here, and then gets back up to the same highs, and we're just still stuck in a range. Then you have a high on the yen, you have a low on the yen, and we're still trading in between it, right? If the Nikkei is going sideways, then why would currency pairs be any different? So I'm not saying that the Japanese yen is untradeable, but I'm mainly focused on the Japanese yen futures and FXY where I own the shares. I think that's two ways to benefit from Japanese yen movement, especially if we have something even remotely resembling what happened last July to August. So if the Japanese yen gets stronger, I can benefit from a nice little run on shares of FXY and also my futures position, which is a nice reward to risk. I'm risking like $700 to make $1,200. But it doesn't matter if price goes to 0 or infinity. That's my risk and my reward. All right. Mag 7. So this is an easy way to think about it. Mag 7 has been, I wouldn't necessarily underperforming, but it's carried the markets for literally a decade. You got to wonder if this is maybe being held up a little bit. But I think the concern would be if Mag 7, if Mag 7 breaks down, that can't bode well for the overall markets. If Mag 7 stays resilient, right? If we just see a simple trend line break here, let's go trend line break here in Mag 7. If we break that trend line and start putting in some higher highs, right? So we have high, lower high, lower high, lower high. If we start breaking out, taking out these recent highs, Mag 7 getting back to these highs, it's probably good for the stock market. Is it vulnerable to the downside? Of course. Levels there, dynamic support. I mean, all sorts of reasons to point like, yeah, the Mag 7s on like their growth side is probably minimum. It's probably now we've gone from, exponential growth on Mag 7 now to like plateauing growth. Maybe they're all priced to perfection. They're priced in where it's like this is about as aggressive as they can be. And if that slows, I don't know if that's where the market starts to drop or the market starts to rotate away from Mag 7 into other things. But this is why equal weight versus market cap weight is going to be something really important to watch this year. Because if people are rotating out of Mag 7 and trying to put their money elsewhere, equal weight could have a pretty good run. But I think that for the health of the overall market, we still have to see our biggest, strongest companies perform really well. So time will tell. But right now, Mag 7 is, underperforming for the most part and sideways. We're down a little bit from the recent highs. Individual stocks, I mean, you can see Apple from the recent highs, it's down, right? So Apple down, 11+% from the all-time highs. Amazon, a lot of volatility here, and this son of a bee. I've got an earnings play on Amazon. We had a gap lower. I still think we have a pullback in Amazon. I mean, if we hit all-time highs, fine. I priced out an earnings trade that hopefully will, see something above or below that yellow box. Google got beat up a little bit. I still think there's a lot of dynamic support between like the 180 to 170 zone. I'm really liking the income trades down in the 150 area. Meta keeps poking these all-time highs, but I think this is very much due for a pullback. So if we have a correction coming in the market, Meta easily finds the 200 moving average. Doesn't mean I'm bearish on it. Doesn't mean I'm bearish at all. But I mean that stock to me with a ridiculously high bar count. Not only the stretch away move, but a super high bar count. I'd like to see Meta pull back. That is a 507 count on the daily 200 moving average. That's a lot. On top of that, we are as high as we've been from the 200 moving average. I don't know what that catalyst is. I really don't. But technically speaking, I'd like to see price start to work its way back to that level. Microsoft, I know Alvin wanted to short it. I still like a lot of income trades here because we've had a lot of chop. I still like, putting in some creative option trades, trying to generate some income. As long as price stays above, 375, 380, I make some profit on that one. Netflix, we're trading up to 1028. I'm watching a broken wing butterfly spread. Again, we have a really high bar count in this one. Same thing with Meta. We are now 329 bars away, plus a big stretch move post earnings as well. I mean, again, I could be wrong on the trade, and I'm going to risk about $1,000. But if I'm right, it's a nice winner. I just want to see if it sticks to the mechanics of not going above 1040. Nvidia looking better on this gap fill. Pretty good technical spot. I mean, if anyone was watching Nvidia, which most people should have been, that was a beautiful spot to buy it. And that's also why I said when we had this high, that I made a little announcement and said we're probably going to hit the 200 moving average before we make all-time highs. And we poked the all-time high, but that was a sign. It's like it poked it and then it just dropped hard, and that was where the big flows came in, found the balance, and now you can see that was a much better buying opportunity. So I still think this market is eager to buy the dip. I just think we have to find the dip. We have to wait for the dip. That's at least what I'm trading. Tesla, we have to wait for probably a trend line break if you want to see more accumulation and positive flows in Tesla. Biggest rival in China, which is what? It's probably not it's not NIO. It's probably some other like lower cost effective EV stock. Anyway, that's it. So 10-year yield still bouncing around. I don't know if inflation this week with Wednesday, Thursday PPI and CPI is going to do anything to the 10-year yield. It would be nice to see the 10-year going lower. I'd love to see the 10-year get below 4.5, which is 4.46 right now. But I'd like to see it stay below that. I'd love to see it get back down to, I mean, I don't know if we're going to come back to this level, but I'd love to see it back down into the, sub 4. Sub 4% could possibly bring our mortgage rates down into the low 6s right now. Might be wishful thinking, might not happen. But if we're sitting here between 4.5 and 5%, that is going to be a tricky growth environment where it's gonna be the governor, it's gonna be the chokehold on growth in the U.S. Okay, all right. Futures wise, fine. China, we did. Advanced decline line watching. Some other stocks here. Let's talk currencies for a second. I'm just going to do a spot check. Currency strength for the day. I'm going to let you go in about 1 minute. I've got some prep to do today, Chandler, if that's cool. So I'm going to go in just a couple minutes. So Japanese yen, a lot of volatility. Weakest currency, then coming back to baseline, kind of in typical JPY fashion. Just a lot of started out as the strongest currency of the day, came all the way down to the weakest of the day. Now it's coming back to the middle. It's pretty typical for a trading day, I suppose. Aussie on top today. This should be helping my Aussie New Zealand position. Yep. So my Aussie New Zealand long looking pretty good. Hopefully going to clear that high 1175. We could also be heading higher. So if Aussie New Zealand heads to fresh highs, I wouldn't mind taking profit around this like 114 area. So I may end up moving. My stop, or not my stop, my take profit up here, probably within about 30 to 50 pips of this high. So I might bump this up a little bit. But a currency pair like this, we might just see a lot of channeling. So rather than just moving the stop loss and thinking this thing's going to trend aggressively, I just let it kind of channel, hit a take profit and repeat it. And then my big sell trade on this one would be if we hold this high, look for a topping pattern to sell this thing back down to, 107 or 108. That could actually be a really good opportunity in Forex trading this year. If I get what I want on Aussie New Zealand, which would be an awesome resistance level with overbought conditions, and look for some type of topping pattern, then I think that'd be a nice swing to have. Trade it all the way back into the structure. So any type of open space like that for 300, 400, 500 pips, I tend to get pretty excited about. Okay, anything else? Aussie dollar. I'm still holding some longs. They're quite small, but I'm still profitable on the trade. I'm looking to see if the dollar gets a little bit softer, taking some profit around 6,400 on Aussie dollar. New Zealand dollar, still holding some small positions long again. Same thing here around the 58 to 58.60 level, taking some profit. Dollar CAD, no trade. What a noisy freaking currency pair that's been. Dollar Swiss, I'm out for right now. Took my profit on that one. Dollar yen, still waiting to see if we have a good gauge on where the JPY is going. There's 2 trades on the Japanese end I'm watching. Either this same high, so we keep going this way, this way, this way, this way, this way, break the structure, then you can sell the heck out of this thing. Okay, or it's This is a low, and the market's going to set up another topping pattern. Okay, you can sell that swing stop loss above the shoulder or above this swing, and then we're looking to get back down to fresh lows, possibly symmetry lows. So this sets up as a topping pattern, then possibly another swing opportunity on the dollar yen. But I wouldn't be terribly surprised to see this thing get back to the highs again. Just more of this. And then you wait for that structure to break. Like, don't force a bunch of trades on the Japanese yen. All right. Pound Aussie, pound CAD, pound New Zealand, I haven't liked in a while. Euro Aussie, Euro CAD, Euro New Zealand, haven't liked in a while. Euro dollar. I mean, again, this 105, 106 zone has been a really solid resistance. If anybody shorted that, that was a good opportunity to short. Stop losses above the 106 handle. If the dollar gets stronger, I think this conversation is very real that the euro dollar could hit parity again this year, with potentially going all the way down to like 96. I would be a buyer. If we hit 96 on the euro dollar, I would be a buyer. I'd be willing to trade really, really small, anticipate a bit of a price pattern and a bottoming, and then take this thing back to 105. So over the next, and look, this is how I think. 12 to 24 months from now, I think we're going to have a monster opportunity on the dollar. I think in the next 12 to 24 months, we're going to have a monster opportunity on the yen. It's just that's probably the hardest one to time. Because right now, and on those trades too, it's like trading currencies. I'm not saying I don't want to trade currencies, but man, if the brokers are charging swap or if they're basically it's negative swap positions. If I'm short the dollar or I'm long the yen, I don't want to trade Forex. Not right now, because just that little like paper cut every single day, or like that double and triple rollover that some brokers charge on Wednesdays. I mean, it just chews away, and it's frustrating to watch that, like, because I am willing to hold positions for like months at a time. So for me, let's say that I turn a position and I make 10 grand. Well, if I had to pay, $500 or $1,000 in negative swap, it's the trade's fine, but it's frustrating when I can make, if I have a $10,000 trade in the futures market, I can keep most of that out of my my contract commission. But if I'm getting dinged every single day for swap, that makes it a little bit more frustrating. But the trade-off is, if it's a good trade, you still make money. And usually when we start to see like an unraveling of carry trades, especially, it tends to be a lot more volatility in the market, which means things move a lot faster. So there's still ways to make money there. It's just, you got to be willing to possibly pay some negative swap. So, all right. I am going to let you go for today. So we've got a busy week, 2-day testimony from Jerome Powell, Tuesday, Wednesday, CPI, PPI, Wednesday, Thursday. We're also right in the middle of earnings season. This is a nice little snapshot for the week. Some notable ones: Shopify and Coinbase earnings this week. Let me look at some liquid ones here. I've got another. This is a good. So Shopify, Zillow, SMCI, that's tomorrow, Gilead, Cisco, MGM, Wynn, Palo Alto, DraftKings, Airbnb, Alibaba. That'll be a big one. So these are some liquid stocks I'm looking at for this week to trade some earnings. Okay, that being said, I will let you go. Have a good rest of the day, and let's have a good week. All right, thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.